Hey everyone, Eric Freeman here again to talk to you today about auto expenses. It may sound too good to be true, deducting the full cost of the auto in the year you buy it for tax purposes, but it's true. We just have to make sure that we know the rules. That way you can take advantage of it. And of course, this has to be for the use in your business. And so we'll go through the methods on how you actually come up with the deduction, the different possibilities you have, and which one may be better in your case. And by the time we get to the end, we'll see and we'll have a good idea on which autos you can deduct fully, what potential limits there are, so you can take advantage of this for your business. Before we get into the specifics on how you can take advantage of these auto deductions, it's important to know a couple details. For example, you want to keep great logs on your business mileage. This is an area that historically has been highly contested by the IRS because taxpayers have taken advantage of it in the past. So there's specific questions on the tax forms that ask you if you keep this information to substantiate your deduction. To help you keep track of the mileage, there's various apps that you can use, and these will help you track what your business miles are versus your personal. You can even keep notes in them on what the business purpose was for that and the locations that you went. It makes it very easy nowadays to keep track of all of that, so you definitely want to do that in case you get audited. You're able to show the IRS that these are true business miles and that you were allowed these deductions. The second thing is you want to keep receipts for your actual business expenses related to the auto. So if you purchased a new car, you want to keep the purchase documents. You want to keep any kind of receipts for the gas or the oil or the repairs, because what you'll see is these are deductions that are included. And so again, if you're going to get potentially questioned on those, you want to make sure that you have support. And then lastly, you want to make sure that you know which miles actually count for business versus personal. Because if you're using an auto that is part for your business and part for personal use, that you're using on the weekends for something, you want to make sure that you know the difference between those miles, because certain miles like commuting from your home to your principal office location, those aren't necessarily business miles, but if you go from the office to a client location or a lunch with a client or something like that and back to the office, all of that is business miles. Of course, going to the grocery store from your house is not going to be a business mileage. It's easier to substantiate your mileage if you have one auto for the business and one for personal. Of course, it depends on your business, the needs, the type of auto that you needed for both your personal life and your business life, because of course you don't want to buy things just for the deduction. You want to make sure that you figure out the needs of the business and then figure out how do you make it deductible. So now we're going to go into more of how you actually calculate this deduction and how you can take advantage of it. There's two main ways to calculate your mileage deductions. The first one is your standard mileage, which is a much easier calculation. You still need to track your business miles versus your personal miles. Or there's your actual expenses, and this is where you're actually totaling up the costs that you incurred to maintain the vehicle, to purchase the vehicle, for the gas and everything like that, and then figuring out the percentage that is for business use and then deducting that portion. Like I said, the first option is your standard mileage. For 2022, the IRS has set the rate at 58.5 cents. Every year, this gets adjusted to a different rate. You want to check each year which rate is applicable. This is a very simple calculation. You just track your miles, your business miles. For example, if in 2022 you were to drive 10,000 business miles, the rest was all personal, you'd simply take 10,000 miles multiplied by the 58.5 cent rate that the IRS gives us each year, and you'd have a $5,850 deduction. A lot of times people may not be aware of that, but if you're using your auto for your business, especially driving around for rental properties, checking on them, doing repairs, managing them, meeting tenants, anything like that, you want to make sure you're tracking all of that, because that's an easy deduction that you want to take advantage of and not miss out on. The second method is the actual expenses. And the actual expenses is typically more beneficial when you've bought a car, and this will allow you to potentially offset more of your income, because this is where we'll be able to deduct the entire cost of the vehicle, as you'll see when we get to the end. So I've listed some of the most common expenses that you could deduct that are related to a business vehicle. So you have your interest or your lease payments. So obviously if you financed a vehicle, you own it outright and you're making interest payments on it, the interest portion, not the principal portion, is deductible. Or if you've leased a vehicle, then the full amount of your lease payments is deductible. And then of course you're going to have insurance expense, so you can deduct that. You have repairs periodically, so anytime anything goes wrong, you could potentially deduct that. Your gas, your oil, if you get car washes, hopefully you keep it clean, registration, all of those expenses that are related to owning and maintaining a vehicle. Now the last one is depreciation. And we all know from watching the videos that this is one of my favorite deductions. So this is where we will get the big benefit of deducting the full cost of the car. As you know, depreciation, typically you have to take those deductions over time. And this means in the case of a vehicle, you're typically deducting the cost of the vehicle over a 5-year period. However, there's special allowances for autos. Now, if you're interested in the specific code sections, you'll probably hear it thrown around, or if you've searched on Google for how this works, section 179 is the code section that gives us a lot of these deductions when it comes to vehicles. And essentially what it says is that you can deduct the full cost of equipment, which includes vehicles, in the year of purchase if it's used for business. There's certain limitations. So for example, you have to use the vehicle for at least 50% or more business to get any type of special depreciation allowance. There's also certain limitations on the type of vehicle that you purchase. Historically, this has been an area that some taxpayers have taken advantage of, and they would buy these nice cars, Ferraris or Range Rovers or whatever else that you can think of, and really they were trying to finance some of their personal costs but call it business, and so they'd try and take advantage of these deductions, and so there were limitations put into place so that you couldn't deduct all of it if you were saying it was for business. But if you're buying vehicles, generally vehicles that weigh over 6,000 pounds, you can deduct, and when it comes to pickups, if it's over 6,000 pounds and has a greater bed length greater than 6 feet, there's no limitations on that deduction. If it's less than a 6-foot bed, then you're potentially limited to a $25,000 maximum, which most, if it's a new vehicle, is probably going to cost more than that. So you want to make sure that you talk to your CPA before you purchase a vehicle, because that may affect your decision if you're able to write it off fully and that vehicle makes more sense for the business. Of course, specialty type vehicles like vans and things that may be used for delivery, there's not any limitations on that, so you can take advantage of this. And of course, if you're not using the vehicle 100% for your business, then you won't deduct the full amount of these expenses, you'll take a percentage. So for example, if you drove 20,000 miles for the entire year and that was your total mileage, and let's say 10,000 of that was for business purposes, well, that gives you a business use percentage of 50%. So you take 50% of all of these expenses, and that would be your deduction to the business, which can make a big difference. So obviously, if you're using the car for 100% business, that's where you'll really take advantage of writing off the full cost of the vehicle. But not only are you writing off the full purchase cost of the vehicle with these special deductions under the IRS code that allow you to, you're also writing off all the other expenses associated with owning the vehicle. And it's important to know that you can write off the full cost of the vehicle even if you financed it. That's really an important thing, because you're using the bank's money. You haven't actually come out of pocket if you financed it, but you're still deducting it as if you had. Hopefully you were able to watch this video before you purchased the vehicle so you could take advantage of this and maximize your deduction. I hope this helped and gave you a lot of tips on your next vehicle purchase. I look forward to seeing you in the next video. Be sure to like, comment, subscribe, and I'll see you all next time.